Good
All
morning.
right. Good morning. So once again, we meet for the end of the week market update. We'll be doing that on a weekly basis, 10 minutes. We're going to talk about all the fundamentals and technicals, whatever happened within this week. We have a lot of action this week, Nour. Can you tell us a little bit about the major thing that happened, which is basically the Fed decision?
Definitely. So the Federal Reserve, when it comes to the dot plot, it was hawkish because they went down from 3 rate cuts to 1 rate cut, according to eight of the members. But
Yeah.
the press conference was a little bit more to the dovish side than the hawkish side. So that was at least with the most major important change when it comes to the Federal Reserve. But the data is basically telling us different thing, and that's why the market is still stable because inflation data came in less than expected. Yesterday, the PPI surprised with negative numbers. So that's kind of like we are looking into kind of disinflation when it comes to the PPI or the producer prices. And this is why basically the market is still, despite the fact that the dot plot saying 1 rate cut, the futures market or the Fed fund futures is basically still pricing in 3 rate cuts this year, starting in September, or 2.5, starting maybe in September. The probability is now 70%, but we have 100% probability for November and December.
So they're still pricing 3 rate cut until now.
Almost 3. It's basically
Almost 3.
more like 2.75.
Okay, and you can see as a reaction on the market, if you look at Dow Jones, S&P, and Nasdaq, Nasdaq and S&P on the new highs, especially in the past 3 days, and Dow Jones still going sideways, doing even corrections as well. It's kind of like moving the other way around. Dollar index jumped from the levels of 104 from the beginning of the week, or 104.27. Now we're trading at 105.45, and the dollar showing some strength again, which affected most of the other currencies, as you can see, and as we discussed at the beginning of the week, the euro dollar movement and how it's going sideways and it's near a break. We did just break a support of the 107.
Yeah, that's the weekly low.
70, and then we touched the 107.20, or actually we're trading at 107.20. Those are the levels that we discussed on Monday. I hope you guys took advantage and benefited from the market. And tell us, what are the next steps for the euro dollar from here, Nour?
Here's
So
the
now
thing.
we're at 107.20.
I mean, we're still within the same sideways. Again, since the beginning of the year, we are not seeing any kind of like a huge breakout or breakdown yet. We're testing that 107 between the 107, 107.20 all the way down to 107, 106.87. That's a level I would say most likely would hold. That's why I would not be rushing into shorting, especially at the weekly low, at least for the time being. Plus, the dollar index is the same thing. We're still within the same range.
Nothing changed.
It's
bouncing back.
It is still the same outlook, and I think this is gonna continue because of so far we still don't have a clear view what the Federal Reserve is actually going to do. The market is pricing in something, but at the same time, the Federal Reserve has something else in mind. So at some point for the euro, because now since the Federal Reserve is talking about 1 cut, while the ECB already started cutting rates and they might cut it again, this is why we're having this pressure on the euro. But I think most probably, I would say so, the range is going to continue until we actually get more clear views on when the Federal Reserve is going to actually cut, and this is going to come basically during the time when we keep getting more and more data. Especially that next week we also have a lot of key data from the US, which I think it's going to give the market. Don't forget, today we have also the University of Michigan Consumer Confidence Index, but at the same time, this number doesn't matter as much as you will have the expectations for the inflation for 1 year and 5 to 10 years. They're both expected to slow down. At least for the 1 year, inflation is expected to go down to 3.2%.
Mm.
5 to 10 years, 5 to 10 years inflation expectations is likely to remain at 3. But the more data we get from the U.S. suggesting a slowing down,
More clarity.
the more clarity we will get, and the more the market will start even pricing in a faster rate cut. This means a lower dollar. Otherwise, the dollar might actually just continue within the same range until we get a clear view.
Okay, so so to sum it up, as you said, on the weekly, we're doing a correction on the euro dollar, still within the same range. By the
Yeah.
way, we are at 61.8 FIBO on the weekly chart.
Yes, on the
So
side.
which is a decent support as well. We need the euro dollar to break above 110 or 109.10 and
Yeah.
or below the 106 to see a proper new direction, or to understand probably what's happening over there. Dollar
Correct.
yen basically took another hike up. We're trading at 158, especially after we bounced from the 155 and the decision that you just mentioned, the Bank of Japan decision interference, and
He's still talking, by the way.
I'm sorry, what?
The Bank of Japan chief is still now in the press conference talking about, what they're going to take decisions for the next meeting, because they were hinting that they might actually start, cutting the bond buying program in this meeting. They did not. But now he's talking about, that is going to be in the next meeting, and the cutting or the tapering will be substantial. What substantial means, nobody knows, because Bank of Japan, multiple times, they talk a lot, but they deliver only tiny bit.
Okay, so eventually, actually, we're seeing that in the market on the 15-minute or 30-minute chart. We're seeing a lot of noise actually in the market, so it's fluctuating up and down. But I think on the daily chart, weekly chart, it's obvious that the candle is positive again after the big hammer that we've seen. So this is the first positive candle since the past almost 3 weeks or 4 weeks, or we're seeing another positive candle again. So the next resistance would be at the 58.50, and then after that, if we close the week positive like this, then we might retest the 160s. Technically speaking, just technically. Let's move to the gold quickly because we don't have much time.
You still have about 2.5 minutes. Gold,
Amazing.
I think gold, we did see like some sort of, a stabilization this week. We're also within the range after the dip that we saw on Friday. Yes, it tried to reclaim at least
Just holding ground.
Yeah, I mean, again, most of the market is still floating around the same levels, kind of. But you have the most important resistance, which is still holding, is the 2,327. We did try to break above it for a little bit, and then we went back down today. We're still up, but not much. So you have a range between, or the levels that you traders need to keep an eye on, is basically the break above 2,326.27, or the breakdown below the 2286 to 80. That will give us that will basically give us a better direction.
Yeah, well, we've seen a lot of orders to buy from these levels, but they weren't able to break through, as you mentioned. So we still need more momentum from the buyers if we need to see a bullish candle from here on the daily chart or even on the weekly chart.
Yeah, especially that the 10-year is not giving, is not helping. 10-year is not helping, or bonds is not helping bears. It might be a little bit helping bulls.
Compared to all the news that we've been seeing, and the China stopping buying, like the Central Bank of China stopped buying gold, and the drop is not huge.
No.
It was expected to break the 2280. We didn't break 2280, which is that's why I was saying it's holding ground. So
far, yeah.
we're still in good position until now for the buyers, and for the sellers, they're still waiting for the break to be able to enter. Let's jump to oil quickly. The major trend is still going down. WTI is trading at 78.12 currently, and we are below the moving averages until this second. So the major view is still the same, trading within the channel down, despite, yeah?
Although there's one thing I would say, the relationship between the price and the time on crude oil yesterday was broken, which could possibly means that the downside risk has eased. Doesn't mean that we're still going to start trending higher yet. It still needs a little bit more confirmation, which should come in by the weekly close. But it needs to be over 83 in order at least to say that, okay, it's much better in a much better position.
Yeah, but it's still, Nour, we discussed the levels on Monday. We mentioned the 72 and the 70s. Like, these are
Oh, sorry, I'm
major
talking about Brent.
supports. No,
I
no,
was
I'm
talking
talking
about
about
Brent.
I'm talking about WTI. So the major supports that we are almost near at the moment are very appealing. It's like a sale on the market. So that's why we're seeing, or last week we saw that big wick and one touch of 72, 60 or 70,
Yep.
and then bounce all the way up to 75 and a half. So this week is positive. If it closes above the 78, that's something good. Or
Yep.
even if it closes higher, that's definitely much, much better. But a big body for the candle would be very beneficial for the buyers, especially for next week interference.
Yep.
Okay, we still have 1 minute,
That'll be
right?
it. No, you don't have anything. It's 11
Okay.
minutes, 20 seconds.
All right. So see you guys on Monday. Have a
Okay.
nice weekend and happy Eid, happy Adha.